Good morning, everyone. Welcome back to our trading room. I'm sorry about the glitch yesterday, but we should be good to go again. You'll have to excuse me. I seem to be coming down with a little bit of a cold. Got together with the grandson over the holiday weekend, and of course he's just a walking germ factory. All right, so let's see what we have going on. Yesterday was a relatively choppy day. The big move came early and also late, but it seems like it's been relatively quiet since then. A lot of choppiness, a lot of back and forth trading. And here we are now. You can see where we left off. We left off around 43.98 here on the NASDAQ. We're opening around 43.83. Going to be a little bit of an opening gap up there. We'll see whether or not the market tries to get into that. Trade forecaster says we're in trend mode for just over 200 minutes, so the better part of 3.5 hours. Let's see, what else do we have going on? Well, not very much right now. Let me just queue up the rest here on the Raptor. We'll give them a few minutes to settle in. If you're looking at a daily chart, it almost looks as though the NASDAQ is getting ready to turn over a little bit. Crude oil on a slide. Here's crude oil for the Raptor, or Raptor, for the Eagle, sorry. And you can see that prices started tailing off yesterday through the overnight. And looking as though crude oil, well, back below $40 a barrel anyways. I thought we were going to see a bottom in crude oil, but maybe I was a little premature with that. And gold also a little quiet this morning, a little bit of sideways action. Here's gold also on the Eagle. The run-up came here out of the open, had a very nice red bar buy signal. This is one reason why I will trust an early signal on the Eagle. I don't trust a lot of signals or early signals, but the Eagle is one of those tools that if you get a clean signal out of the open, well, you might want to give it a go. As gold prices made a very pronounced rally, first 20 minutes, half hour of the open, and now they're stuck going sideways along with the rest of the market. So we're going to have to sit here for a while, I'm afraid. The hawk here on the NQ into yellow bars. I'm not following the E-mini this morning, but I suspect it's going to be more of the same. Here is, just one second, the Raptor for the YM for the mini Dow. And you can see that it too very content to be moving sideways here at the moment. A little bit of a downward bias, but for the most part, it's just moving sideways. Good morning, Marlene. Marlene is asking, what settings do you use for gold? You can use the default settings for gold. I've found that the alternate settings that we use, the 4-tick hawk, the 4-tick falcon, and the 6-tick eagle seem to work pretty well for gold. All right, so we're working on a sell signal. Talk about your early signals here. And, oh, come on. There we go. So possible early signal here on the eagle. Now, you know, the market's still trying to find its way. So any signal you take at this point is going to be a little bit of a crapshoot. We do get an opportunity for a second push on this entry. If you're more comfortable entering below the low, that's fine too. And this is very much just you know, one of those let's dip our toe in the water kind of trades. And see what happens. So you can see, regardless of where you chose to enter, we would have been filled here, and now we're looking for the buyers to come back and for the sellers to once again, pardon me, give them a little bit of heat. All right, coming here with a green bar sell now on the, or possible green bar sell on the hawk. Once we see that the sellers have recommitted to the trend, I'm going to get more aggressive with my stops. I may even go with the bar high low. So you can see here on the hawk, we've produced a couple of bars on this swing. We're currently working on the same bar here on the Raptor and the Falcon. I'd really like to see one of these bars continue lower before I get too quick with my stop. Well, actually, you know what I could do is the ATR stop is right above these highs. So that's probably acceptable. So we'll start with that. Take a little bit of risk out of the equation. Gold making a funny little move here. Here's gold now on the eagle, and you can see it's unfolding rather quickly. A little bit of a move lower, getting a green bar sell. If gold stays bearish, that's probably going to mean the stock index is going to get a little bit more bullish. Come on. So here we are, back toward the low of the morning. And you know what? I might go tighter still. We'll go with parabolics. Oops. There we go. Parabolics are nice because when the trend is first starting out, the stop stays a little bit further away. And then as the market momentum begins to decrease, the stops come in a little bit faster. The problem we have right now, though, is we don't want to see one of these scenarios where the market just waffles back and forth, back and forth. Here's probably a better example. And the parabolics keep flipping from side to side. That's what I don't want to see. The low of the morning here, that's the real obstacle, 43.75 half. So if we can breach that, we'll be in pretty good shape. Otherwise, we might as well take our medicine early. It's amazing that everything is in decline this morning, though. Gold is down. Well, it's up, but recently gold has come down. Crude oil is down. Stock index is struggling. Okay, so I'm going to hold my stop right here, just above this high. I've disabled the automatic rolling of the stops. Oh, they're struggling. They're trying hard. All right, so we're going to put that on the shelf here for the moment. The Raptor is, one of those tools that will give you an early trend change signal, and that's kind of what we're looking at here. We're looking at a soft edge buy signal on the Raptor. We may be getting a trend change signal here on the Falcon as well. You see how the trend line has moved from red to green. Here's our up, here's our down. We're looking for an up. If this does turn out to be a bottom, there may be a buying opportunity here. All right, so they're still waffling there as well. So not much going on right now. I'm just checking the reports. Oh, I see. There's a Fed announcement in a couple hours, so that's going to put the bit of a wrinkle in this morning's trading, I'm assuming. Well, all we can do is wait them out. So here on the Raptor again, I'm looking at a possible trend change signal. You see how we have this bottom in place? I'm not going to get too crazy about buying it just yet because I'm still obviously short on the Eagle trade, but a very, very tight range. Definitely seems to be a rejection of the lows here. This whole 43.75 area, 76, a lot of sensitivity there. Looks like they may try to give it another poke. I'm assuming, given that there's been a fair amount of buying going on here, around 43.75, 76. If we see a breach, we should see a little bit of follow through. Come on. Well, they're trickling lower. That's more off of the daily chart, I think, than anything. Hold on here. While we're waiting, I will build you a daily chart so you can see what I'm talking about. It's not a bad idea to consult a daily chart from time to time. Bear with me here. Where'd you go? There you are. All right, so here's a daily chart for the NASDAQ. And I guess the thing that kind of jumps out at me is this big move down here, right? Pretty big move to the downside. And even though we've recovered a little bit, it does appear as though it's been a little bit of a struggle, right? It does look as though, except for this early move here where we had tremendous momentum higher, it looks like for the most part the sellers have control. And you see how we're starting to fail, how the momentum is beginning to wane as we get toward these current prices. Well, very often that's telling you something, right? You don't need to be a master technician to say, that kind of looks like a ball cresting when I throw it in the air. It's starting to top out and maybe it's going to start coming down again. And of course you can get more technical. You can start shooting trend lines. And you can drag your trend lines over. Stuff like that. In which case it becomes rather obvious that we're starting to shallow up a little bit, right? We're coming in a little bit short of our objective here, at least as far as this trend channel is concerned. Not that I'm getting too crazy on the bear side, but like I said, sometimes it's helpful to take a different look at things, have a slightly different perspective. Uh-oh. They're going to try to they're going to try to hold this support area now, which means I'm probably going to get stopped out. And we are teeing up for a little bit of a reversal. Yeah, oh well, it was worth a try. Now it does look as though we're going to see the NQ perhaps test the top end of this trading range. We could just simply buy in off of the failure. However, I always feel a little bit better about looking for that retest point. And what I'm talking about is we've got this sideways range going on, right? And now what I would like is I would like to see the market break out, come back, retest, and then produce a signal for me. That gives me a little bit more confidence than simply trying to buy the breakout, because what's happened if you try to buy the breakout, of course, is you're buying at the top end of a trading range. And given that most breakouts fail, or most breakouts from a trading range fail, that's a risky place to try to get into a trade. Okay, so we're getting a first micro-macro cross signal here on the hawk. Again, not quite the retest I was hoping for, but that may be all that we're going to get. Let's see if we get something here on the falcon. Ah, darn it. Okay, so that first micro-macro cross did have enough follow-through to hit its first profit objective, which is good. Now we're getting a little bit of a retest, which is okay. We're working on a cloud crossover here on the Raptor. And a possible trend change signal here on the Falcon. Come on. All right, so the Falcon and the Raptor both producing a possible trend change signal. I'm going to look at the one here on the Raptor. Still not necessarily ideal. The problem with this trade is going to be, where do we want to cover it? And we're probably going to want to cover it fairly deep, maybe even deeper than that to start. So we've got the warning dot. I would think we have to cover it at least to the hard edge. The NQ bulls continue to support the market pretty well, even though they're not going to give us a signal here at the moment. All right, so here we are again. With that warning dot that keeps coming and going. Yeah, they're really stuck here this morning. So we've got a little bit of a trading range from 43.91 all the way down to 43.74, it looks like. Wow. What a tug of war going on this bar. Yeah, Floyd says Yellen's speaking later today. Yeah, that's no doubt what's putting the wrinkle in today's trading. Traders reluctant to commit one way or the other. Well, let's put that back on the shelf then. We are working a 4-arrow consolidation here on the Hawk. If you were really desperate for a trade. But we've got the same thing happening now in reverse, don't we? Where we had all the hesitation on the short side, right? They broke down and then failed, moved higher. Now they've kind of found where the sellers are at. Yeah, they keep flashing me that warning dot. So I guess we'll stay with the Raptor a little while longer. There we go. All right, well, it took a lot of waiting, but we did get a buy signal, and we'll see now whether or not we're going to get any follow-through from this, or if this is just going to be another fake breakout. I will leave the break-even trigger in. I will leave the profit target in. With the Raptor, I'm running 2 contracts anyhow, so I'm going to have a runner in play. Thanks, Ryman. Ryman says the 10 a.m. consumer confidence forecast, 93.9, actual 96.2. So they forecast 93.9 and the actual is 96.2. But again, those types of things, See, people always ask me, Eric, do you follow reports? Should I follow reports? Should I see what's going on with those reports? Well, only if those numbers mean anything to you. See, by and large, the market had a hint at what those figures were going to be anyhow, and traders positioned themselves accordingly. So you can see the market fell off a little bit, but given the rally, or a little bit of a rally, this isn't really something we can call a rally. The numbers may not be as bearish as traders anticipated. So that can actually make prices go up. So here we are, looking at a little bit of a fake breakout. Not to say the buyers aren't going to recover, but it's a struggle for them right now. Oh dear, having to sweat this one too. So what I'm looking for now is just a little bit of a recovery, a little bit of a push higher, just to show that maybe I can safely begin rolling my stops. It would not be out of the realm of possibility here to see the market try to retreat just a little bit, which is why I'm trying to keep my stops below the hard edge. Come on, they're trying. Oh my goodness, what a labor this morning. Well, there's nothing to do, nothing to look at. Crude is still sideways. Gold is still sideways. Oh my goodness, we actually had a tick here. We actually had a bar finish on the NASDAQ. Oh my goodness. This is crazy slow this morning. People must be hoping for good things from Yellen's announcement, because this is crazy. I'm going to roll up my stop a little bit here now. Hopefully we'll slip high enough to hit the break-even trigger. Well, it looks like we at least got a scalping target out of this move. Didn't quite hit our swing target, but I think we had enough out of there for a scalp. Oh, way to go, Tony. Tony grabbed that scalp with 4 contracts. That's the way to do it. Nicely done. Okay, we're seeing a little bit more support here. I'm going to hold my stop where it is. If you were thinking about protecting this position, or not really protecting, but taking some risk out of the trade, you could roll your stop up here under the last swing. Pardon me. Come on. They're trying. Yeah, Tony says the darn median line is in the way. Tony also asked, Eric, do you ever trade options? Not for a long time, Tony. I did for a while, and actually I should revisit it because options are a useful alternative to some of these more expensive markets. It's not that expensive to day trade a market like the NASDAQ, but certainly if you wanted to trade a full crude contract or something like that, those markets can tend to get a little bit pricey from time to time. And if you're doing end of day trading, sometimes options are a good alternative, as are ETFs. You can get an ETF on the major commodities, like the stock index, the SPDR, of course, the SPY, SPY or SPDR, is a derivative of the S&P. And you can literally trade it for, pennies on the dollar. Of course, that's going to reflect in your earnings as well. But my problem with options is the time decay, right? With options, and I realize there are option strategies that take advantage of time decay, straddles and strangles and butterflies and condors and, and all that to try to take advantage of a sideways market. But for the most part, my trading has always had a directional bias to it. So if the market is moving sideways, I tend to ignore it for the most part. I tend to focus on, for better or for worse, I tend to focus on markets that are trying to go somewhere, either higher or lower. So if you have a pretty good idea that a market is getting ready to move, then yeah, an option can be a great resource. Options on the SPY are very inexpensive relatively to the futures, and they can yield some tremendous returns in a very short time if you pick the direction right. Writing options is another strategy. I never really got into writing options, but I know there's lots of option strategies where you write options, deep out of the money options, and you hope and pray the market doesn't move. Binary options are the big thing now. I don't like binary options. They're essentially gambling. It's a fancy form of gambling. You're guessing where prices will be at such and such a moment in time. And how anybody believes that is not gambling is totally beyond me. Yes, trading can be equated to gambling in many ways, but guessing that the NASDAQ is going to be at 4,400 by noon today is not one of them. So I don't know if that answers your question or not, but Yeah, I haven't really followed up on a lot of option strategies. Probably the best one, my friend Tom Loger was always keen on credit spreads, dual credit spreads, because it helps offset some of the risk that you're in a trade for. There's lots to learn in the trading arena, and there's certainly nothing wrong with learning. There's nothing wrong with reading books about different trading strategies and whatnot. I do it all the time. If I hit a bookstore, I make a beeline to if they have a finance section or a business section, that's always where you'll find me thumbing through the books that are there. But I'm also a firm believer that you don't need a lot of strategies in order to be profitable. I don't think the money or the success is in knowing more. In fact, sometimes knowing more can be a little bit of a detriment. Most of you will have heard of the turtle traders. Richard Dennis, of course. He was the kind of the founder of the turtle traders. Many of you will also be familiar with the movie Trading Places with Eddie Murphy and Dan Aykroyd. If you weren't aware of it, the premise of that movie is actually a premise that Dennis and Eckhart had. They had that conversation where Eckhart said that the reason Dennis was such a successful trader is that he had an innate gift. And Richard Dennis said, no, anybody can be a trader. They can be taught to trade. So that was actually the premise for the movie Trading Places. The writer of that movie took that initial premise from Dennis and Eckhart and turned it into a very funny movie. But the turtle traders were a group of people. They were taught to trade by Richard Dennis, and they all made money trading his system. And his system was not complicated. Well, it was sophisticated from the money management standpoint. Richard Dennis never risked more than 2% of his trading capital. Oh, where have you heard that one before? But his entry signal was insanely simple. Insanely simple. And since we're watching this trade just percolate here, we may as well look into this a little bit. I shall show you if you've never looked into this. Let me entertain you. All right, so here's our daily NASDAQ chart. And don't get me wrong, I'm not suggesting you abandon the DTS system. The whole point of my explaining this to you is that you don't need, system after system after system. You have a system that is very sophisticated, a system that works. You need to learn to use that. But while we're talking about Richard Dennis here, let me show you what he did. So Richard Dennis used a thing called the Donchian channel, developed by Richard Donchian. It's essentially a breakout system, really. And what he would do is when the market broke, well, we can't go back too far. When it broke the 40-day high or low, he would buy or sell accordingly. And you can see it actually worked out pretty well. What made him so unique is that he traded on the pit level, but unlike the other pit traders who were, in and out of a trade a dozen times a day, he would hold his position for days or weeks or sometimes even months if the market continued going far enough. And he had a unique way of adding to his positions. That's really what made him all the money. If you traded this way just on onesies, you wouldn't do very well. Well, you'd make a little bit of money, but it would be, I think overall it would be a little bit more frustrating than profitable. But he had a unique way of adding to his position size given the volatility of the market. And there's more to learn about that. You can Google it to your heart's content. But essentially, he would be looking for a breakout. So when prices broke the 40-day low, he would sell. And then he would be adding to his positions here. I don't really know if he had profit targets. That's one thing I'm not sure of. Whether they had profit targets. I'm sure they took profit along the way here. They would be silly not to. But I know that he also liquidated his trade when it hit the 20-day higher low. So he would have liquidated here. So he would have entered here. He would have liquidated here. And then going the other way, he would have entered here, and his stop loss would be down here. So you can see it's a rather expensive system, or it can be a rather expensive system to trade because you've got large risk amounts. But it's kind of interesting sometimes, if you just go through the charts and you see how things play out, sometimes it's not a bad entry signal. Well, here it was hardly profitable. You entered on a couple ticks above the high, only to watch the market scream lower and stop you out. The other thing that Richard Dennis is known for is he would always tell his traders, if you want to get large profits, you better get comfortable with big losses. Because in his way of thinking, if you're going to capitalize on a trend, you've got to be comfortable, sucking up a loss like this. So he would have just entered here. He's just better than break even now. And yet, how much profit is there in this trade? So right now he's long from here, and as of right now, there's $2,500 in profit that he would have on the table. That's a lot of profit. But it's interesting all the same. So, like I said, it's always interesting to learn. Sometimes you'll pick up something that you didn't know before. But it's it's a whole other world, trading options. Yeah, Tony says I did okay with iron condors until I didn't. Too darn confusing for me. Good morning, Emmanuel. Yeah, that's the thing with iron condors, and a lot of these option strategies is the brokers love them. You're buying both sides of the trade. Brokers are getting commissions on both sides. Options are sometimes a great stop strategy because it definitely locks in your risk position and gives you a little bit more staying power. What I mean by that is, here I got to build a chart again. And let's look at soybeans for a chart. Okay. So let's say you wanted to buy soybeans at 9.15. Well, soybeans are a crazy expensive market. Well, from a day trading perspective anyway. So you'll see here, even to buy beans here and cover down here, oh, actually, that's not bad. That's a much smaller range than, Yeah, I'm on the daily. Okay, that's a much better range. Usually soybeans are in the neighborhood of several $1,000s to trade. Let's say we traded below the swing low here. That would be a little bit more realistic. Okay, so there's just over $1,000 at risk, which, you know, it can be a little bit of a nail biter. So if you, say, bought soybeans futures here at 9.15 and you bought a option, a put option at 900 strike price, you would be on the hook for those 15 cents. If soybeans traded now and went lower and lower and lower, your put option would start earning money as prices went lower, and it would offset all but the 15-cent loss. And now I'm simplifying this a little bit, but that's the principle of it. So it actually gives you a little bit more staying power. So if you had a stop here at 900, you would have been stopped out. Using a put option, however, you can ride out this swing until prices recover and hopefully go higher up to your profit objective. So there's a consideration for using options as a stop loss. You do, however, have to pay close attention again to the time decay, and you are out of pocket as soon as you buy that option. That option is going to cost you until you liquidate it. Whereas a stop loss doesn't cost you until it gets hit. So sometimes it works out the same. You know, if you had, what would it cost us to have a stop at 900? So a put option at 900 is almost certainly going to cost you $775, $800. The only good thing about using the put option is it does give you that little extra staying power. If the market ticked 899 and then reversed and went higher, well, you would have been stopped out on your stop, whereas your put option, you're still in the trade, right? Your stop, air quotes, stop, never got hit. All right, our NQ trade here doing not too badly. I think I'm going to go to a more aggressive stop strategy now, however. Try to hold on to some of that some of that profit, reduce some of that risk. Come on, keep going. Just looking back at yesterday's highs, we still have some room to move here. Yesterday's highs looking around the 4408, 4410 area. So there is some room here for the market to try to get higher. Simon says on the E-mini right now, it's very tough to scalp to make 1 point. I know, it's, I don't even have to look at the E-mini to know that it's just a brutal kind of day for scalpers. Things will loosen up this afternoon. Here's the mini Dow, which will be pretty close to the E-mini. Whereas the NASDAQ has already moved a little bit higher here, the mini Dow just kind of blah, not doing anything. That's one nice thing about the NQ is that because it's a little bit more tech bias, it will often move independently. Not too far, mind you. It is still on a leash. It is still tied to the rest of the stock world, but you know, if Apple and Tesla and Netflix and all those are doing all right, then often we'll see a little uptick or downtick, as the case may be. But the NQ is a tough creature to short. Every time I try to short the NQ long term, mind you, not short term. Every time I try to short the NQ long term, not a good idea. Tony says the mid cap had a nice move up. Now it's also in waffle mode. Okay, well, the NQ's still strong. So that initial attempt at selling around 4,400, and how do I know there was an attempt at selling at 4,400? From this bar right here. You see how it has a little bit of width to it, a little bit of a tail. There was an attempt at shorting it there, but the buyers prevailed. Come on. I know it's kind of boring today, folks. Sorry, can't help it. The eagle actually never produced a signal here, which is a little bit odd. The hawk, as you can see, several signals. Here was our 4-arrow consolidation. Very nice follow through on that. First micro macro cross, should have jumped on that one right out of the gate. And of course, as you can imagine, we had a trend change signal here on the Falcon. Now we're up to our primary resistance line, 44.03, and it looks like we're going to press on through to the next line, which will be very near yesterday's highs. Yesterday's highs were, one second, 44.09. So the resistance line around the 44.11, 44.12 region. We'll see whether or not we can get that high. In the meantime, we'll just keep nursing this Raptor trade. And we're doing not too bad with it. Yeah, not too bad. We've got a little over $200 in open profit on our remaining contract. And I'm hoping that the parabolics are going to bring the stops in real tight if the trade begins to flounder, which it is starting to look a little bit like the sellers are starting to hop on it. Well, they're powering on through. Come on. Yeah, Tony says, tell us a story, Uncle Eric. You know what, folks? This is almost on the borderline painful watching this go higher here. We're going to close up the room for this morning. I think we're going to see a little bit of a reset here. We're getting really, really close to yesterday's highs. There were several hits around the 44.06 to 44.08 region, so I think we're going to see the market stumble here in a moment. But we may as well close down the room. There's probably not much going to happen until after Yellen's announcement, which is coming in a couple hours' time. So you may as well take it easy until then, and I'll see you guys tomorrow morning. Now remember, tomorrow morning we are meeting in the open house room. If you don't have the link to the open house room, simply go to Indicator Warehouse, and I'll show you this in a sec. So go here to Indicator Warehouse and click on Free Trade Room. And somewhere through here, once it finishes loading, you can click to register for the free trade room access. All right, so that's how you get into the Wednesday morning room if you're not currently doing that. And you know what? I think I'm going to get really, really tight with my stop here. I'm just going to stick it right there. Just give it one bar, actually one bar. That's all they're going to get. And we're going to protect a lot of that open profit. The logic here is that if they're going to reverse one bar, they're probably going to reverse two. All right, you guys, have yourselves a nice day. We'll see you tomorrow. Bye for now.